Welcome back, you're with Storyboard. The annual Pitch Madison Media Advertising Outlook is out this week and projections are not bullish. Growth at 9% in 2012 as against the 8% notched up by the industry in 2011. But as Animesh Das reports, the media and advertising fraternity feels things could improve in the second half of the year.
Let me tell you, I'm eagerly looking forward to the numbers. You get the message, you know. No, I'm just kidding.
Some smiles, some introspection and muted celebration. The launch of the Pitch Madison Media Advertising Outlook showcased a serious and slightly worried Indian media and advertising industry. And that's because the bearish sentiment that slowed down growth in 2011 from the projected 17% to just 8% is expected to continue in 2012. According to the report, the industry will grow by 9% in 2012 to reach revenues of 28,013 crore rupees. While 2011's economic challenges like rising inflation and a weak rupee will continue to make advertisers tighten their purse strings, industry watchers remain optimistic.
India is a growing economy and you can't hold this growing economy down for too long. So we think we've had a bad last half of 2011. 2012 has also started not on a very optimistic note. So we think after a gap of 1 year of slowdown, the second half of 2012 should really pick up. And we think on an annualized basis, the market for advertising should grow at about 9%.
I think sooner or later, we will start seeing a few business-friendly policy announcements being made by the government, in the areas of retail particularly. And we could also see, a softening of interest rates. We could also see inflation coming in under check and therefore offtakes improving. And if the recent performance of the stock market is any indication, then obviously the sentiment is only going to improve. So second half looks obviously better than the first half.
In 2012, television will continue to have the lion's share of the industry ad pie and is expected to maintain its 10% growth rate. For print, however, the cut in spends by key sectors like banking and financial services, real estate and education is expected to continue, lowering growth estimates to just 6%. The good news, however, is online, with internet expected to log a whopping 50% growth. This will help it surpass radio, outdoor and cinema to become the third largest medium in 2012.
Digital has been growing significantly over the last few years. We consider it's an extremely important part of us communicating with our customer base, and yes, we'll certainly be spending more in real terms and also as a percentage of our total fixed marketing.
Consumer demand on search remains strong. We are seeing a greater than 60% year-on-year query volume growth, and we are hoping that this would translate into advertising, into search revenues, and we remain optimistic about that. Display advertising is led by video for us. YouTube continues to be a very, very strong online platform, and we are encouraged to see a lot of new categories open up to video advertising, such as auto, telecom and CPG. So we are very hopeful that video advertising will spur the overall display revenue for overall digital and internet advertising.
For the Indian media and advertising industry, 2011 brought back memories of 2009, the year of the slowdown. The flat growth of radio at just 2%, a drop in print and plummeting outdoor spends may be unnerving, but all is not doom and gloom. The consensus for 2012 is that advertisers will continue to remain cautious but won't put the brakes on spending just yet. In Mumbai, Animesh.